So hello everyone and welcome to those of you in the room, as well as those joining us online. I do want to note that today's event is being recorded. I'd like to particularly acknowledge the Leader of the Opposition, Peter Malinauskas, for fitting us in today into his schedule. For those that don't know me, I'm Rudy Peake, the Managing Partner at BDO in South Australia, and your host for today's event. Thank you, all of you, for taking the time out of your day to join us as we discuss setting the direction for business in South Australia. For those in the room, please make sure you've checked in via the QR code, if not already done. And for all of you, we encourage you to get vaccinated if you haven't been vaccinated already, of course. The only other announcement I need to make before we kick off is about the toilets. And they are out at the back to the left there, just behind the bar, so hopefully you can find that. I would like to begin, however, by acknowledging that the land we meet on today is the traditional lands of the Kaurna people, and that we respect their spiritual relationship with their country. We also acknowledge the Kaurna people as the traditional custodians of the Adelaide region, and that their culture and heritage beliefs are still as important to the living Kaurna people today. So this is the 8th year that we've conducted the BDO South Australia State Business Survey. And of course, as with all things in the last year or so, this year is a little bit different. However, understanding the day-to-day experiences of South Australian businesses continues to be our focus, and it feels particularly important at the moment. We'll be conducting a few live polling questions throughout today's discussion, which will be entirely confidential. So please be as candid in your responses as you can. You should have received instructions via email prior to today, but as a reminder, please go to menti.com, menti.com, and enter the code 30777643. If you have any technical issues throughout the event, please email adelaideoperations@stoneandchalk.com.au. So that's adelaideoperations@stoneandchalk.com.au, this wonderful venue. It is now my great pleasure to introduce Nikki Govan, our moderator for today's panel discussion. So Nikki is the chair of Business SA Board and a director of the Australian Chamber of Commerce and Industry. She's also the chair of the Adelaide Economic Development Agency and recently chaired the South Australian Government's Events Advisory Group. Nikki owns and manages the nationally renowned Star of Greece restaurant in Port Wollonga, is a member of the South Australian Skills Council and much, much more. In summary, one of the busiest people in South Australia and one of the few people I've ever met that's actually been able to clone themselves. I think that's the only way she can fit all this in. So Nikki and our panel have generously agreed to give their time to join us today, and between them have significant insight into and experience of the business environment in South Australia. So welcome and thank you to Nikki for being with us today. Over to you.
Thank you. Manana Pudni, Mani Nadlu, Tampidni Nadlu, Gana Yatang Imbaindi. I too acknowledge that we meet on the lands of the Kaurna people and respect their traditional ownership of this land, past, present and emerging. Thank you very much. I also acknowledge Peter Malinauskas, the leader of the Labor Party. Pete's been a great friend of Business SA for a very long time and has been a terrific supporter of business. So it's great to have you here. Great to have everybody here as well in person. It's always better to have that drink in a hand. And for those of you that are online, I hope you can too be sharing in the, in participating in being part of living in this great state in which we are. We are incredibly fortunate. I think we might be with face masks for some time, but I think that's a very, very small price to pay for being able to have our businesses open and being able to share and communicate. And obviously it's really good for the mind, body and soul being able to get out and participate and meet with people. So, Rudy, thank you very much. Great to be here today. It's my great pleasure to introduce the panel. First of all, we have Julianne Parkinson. She's the founding CEO of the Global Centre for Modern Ageing, launched in 2018 and headquarters In Adelaide, the Global Centre is a global agency bringing enterprise approach using evidence-based insights into the ageing well industry. Please welcome Julianne. Jennifer Lynch is the Executive General Manager of the McLaren Vale Grape, Wine and Tourism Association, the peak body representing more than 550 businesses and over 500 million in gross regional value, encompassing grape growers, winemakers, tourism providers in McLaren Vale. And they wrote this, one of Australia's most valuable wine tourism regions and home to the shameless plug of the Star of Greece. Jen, thank you. James Packham is the Managing Director of Harcourts Packham, specialising in sales and management of residential, commercial and retirement real estate. James is a keen philanthropist within the community, including projects with Rotary and a supporter of the Harcourts Foundation. Please welcome James. And our final member today, David Fechner, is a corporate finance, tax and advisory partner with BDO in South Australia. David provides support to the fast growth businesses, including advising on valuations, mergers and acquisitions. He has significant experience with engagement for both publicly listed and private companies. Please welcome David. Thank you. All right, I think there is the facility for those of you that are online to be forwarding questions, so they'll be put to us as well. But we certainly do have a number of questions that we've got and a great opportunity for everybody online and here today to be participating with a number of questions. But let's begin with a little bit of scene setting. How do you feel, I'd put it to each of the members here, about the current business environment? What's the sentiment in the industry sector that you represent? Julianne, let's kick off with you.
Thank you, Nikki, and good afternoon, everyone. Immense interest, opportunity, almost for the ageing well sector. A lot of new paths to be forged, both here in Australia and certainly overseas. We've never had so many people over the age of 60 on the planet ever before, and if we cast our minds forward to 2050, 1.5 billion people around the globe will be over the age of 65. Australia will have its good share of that representation. What that means, not just for traditional sectors like the aged care, but indeed for a whole new aged tech assault and response to how we're going to live, work and play in every city, community, town around the world will have an impact and an opportunity. So really great for South Australia to be at the forefront of change, not just to improve the lives of citizens and to create, stimulate a new sector for our entrepreneurs and our organisations, but the export and the IP will be phenomenal when we, as we will, get this right.
Thanks, Julianne. Jen, obviously wine tourism in a regional area. How are you seeing things down south?
The microphone is on, I think. Speaking on behalf of at least primary industries and tourism and wine, so two value-add sectors for South Australia and indeed Australia, it's been quite mixed over the last 12 to 18 months. I think we've seen a combination of gratefulness, whereby we're in a position now that is quite strong for South Australia for trade, when we compare ourselves to our counterparts interstate and or in other countries as well too. But equally a sense of fatigue, may I say, and that comes from compounding factors, marketplace factors that have been largely out of businesses' control in the past 12 to 18 months as well. A lot of what we've seen has been based on policy decisions as opposed to consumer behaviour choices and so forth as well. So whilst we've seen a lot of gratitude and agility, I think fatigue is something that comes to mind in primary industries and value add as well too. And we're now just looking forward to reopening and re-establishing business as well. So another point to make is, I suppose, a heightened awareness of mental health and what that means across our ag industries and tourism as well. I think the conversation is well and truly open, and a growing awareness of the importance of mental health as a part of good business as well, not just on the side.
Yeah, very true. Now, James, residential and commercial, are you seeing the same thing at the moment, or is there a difference there that you're observing?
I think a lot of people misinterpret what's going on in the real estate market because they say, oh, prices are going up so fast, it must be a great time to be in real estate. We are facing a huge undersupply of available housing. There's just not enough homes for the people that are competing for them. And there's people that should be able to enter the market, shop for a house and secure one in 30 days, and they're still in the market 10 months later, and the prices continue to move away from them. So we've got a heavy retraction of available stock. We've had a huge undersupply of the provision of building materials. There's been a lot of builders going broke because through no fault of their own, they've not been able to source building materials. That's not allowed them to complete the next stage of a construction and get the next drawdown payment. The other thing that we've seen is a lot of people that are Adelaide expats that left to Sydney and Melbourne to chase those higher wages. They're now returning to Adelaide. They're rationalising their lifestyles, and they're returning to Adelaide, and they are smashing Adelaide buyers at auctions. It's almost like a two-speed economy that we're seeing go on. And what's even worse in things recently is the people that are buying a house and then sort of the people that are selling a house in order to buy the next one, for them it may all be relative, but the investors have been the first to start liquidating properties. They've been in possession of rental properties and they think this represents a great opportunity to sell them. And so we see our rent rolls just hemorrhaging. And what's actually happening is those investors are selling those properties, and that's now retracting the amount of available rental properties. That's now putting a huge, we're now seeing a huge undersupply of available rental homes as well. So we're getting 20, 30 people applying for one house. People are offering way over the asking price for a rental. And it is really getting a little overcooked. So I think there's probably going to need to be some government consideration to maybe what we're going to do. I'm sure those conversations are going on currently, but they're very needed.
Thank you. Thanks, James. Now, David, my colleague at the Victorian Chamber of Commerce today was saying to me that that they're very busy and they're seeing a lot of work in mergers and acquisitions.
Absolutely. We're seeing that in South Australia. We're seeing that nationally. So we're seeing a lot of businesses continuing to invest. We're seeing a lot of businesses undertaking transactions. The discussion even from offshore interest into South Australia, we'd say, how am I going to sell a business? They can't look at me, they can't do anything, but video, GoPros, Teams, Zoom, all of those are being activated, and corporate finance is as busy as ever. Certainly some of the key questions, I guess, going in terms of business is how you continue to do business development in this environment, particularly for businesses that are exporting interstate and exporting overseas, and the challenges around that. So I guess getting through the last 18 months where you've had existing relationships that you've been able to explore, how you build the new things and what that means in a digital environment. And workforce, so even challenges into hospitality. So you can all tell now if you go for a wander in the city or down at McLaren Vale on a Friday, you probably can't get into a restaurant. Restaurants are looking to increase the number of lunches or dinners they're doing, but their workforce has got into a pattern of availability. That ability then to click that up one more day, one more evening is becoming a challenge, even in a space where you thought that opportunity would be good to grow. So it'll be very interesting to see what comes out of the results tonight.
Yeah, absolutely. And we've certainly got, skills, workforce, issues on the agenda for us today. But now it's time to get everybody working. We certainly, I think, have all felt that South Australia has fared better in this global pandemic over the last 12 to 18 months. So we're going to open the first question for you here. The first question, which should be coming up online for those of you that are online, is from your experience in business, do you have confidence in the health of South Australia's economy and its ability to support your business growth? So if you could take a moment for those people that have actually registered here online, there we go. Interesting. I was at a function yesterday where I think the average age of the business participant was around about 28 to 30. And I saw incredible confidence from that particular group. And I thought, I wonder if that's demographic and whether we might see some different results here. But yes, we're certainly seeing that there is confidence in the market. That's interesting. Peter, there's one for you to be looking at. James, I know you're expecting the surveys to show a fairly optimistic result. What do you make of it?
Well, I better argue in the affirmative, I feel. Look, we're lucky that this didn't happen 10 years ago, because at least we've got the technology to support what we're doing. I mean, you know, right now you've got QR codes, Zoom, Skype, Netflix, Snapchat, DocuSign, everything under the sun. So, you know, 10 years ago, we could have been in a bit of trouble with this. So it's arrived at the right time for us to weather it. You know, no secret, Australians like to spend money, and we sometimes like to spend money that we don't have. We spend the money we've got, and then we like to borrow money. And you know, what we've learned is that the government, they feel the same way. They like to borrow money and they like to spend money too. And so what we've done here is we've fired hundreds of billions of dollars out of the cannon. And so you'd bloody expect this to be the response. I mean, and the only way that we've been able to do that is just because of interest rates being at historic lows. I mean, you know, despite the huge borrowings, both as individuals and as the government, our repayment, both governmentally and as individuals, is still far less than the response that we had to earlier fiscal responses to the pressures that we faced. And so, you know, interest rates are extremely low, and I think people are starting to rationalise things differently. I think in the past, people, and I'm going to use a real estate example, people would look at a property and they'd say, am I prepared to pay $1 million for that? They needed to feel that what they were getting was value for the product. Now I think people are just asking, am I prepared to service that level of debt? Can I pay the $4,000 a month? That's all they're asking. 60% of people in this country retire without having paid off their mortgage. Our relationship with debt is changing. So we're borrowing a lot of money. Right now, the median income in South Australia is about $66,000, median house price $540. The average house is 8 years income. You're just going to see that go 9 years, 10 years. We're just not afraid of debt anymore, okay? So there's going to be a lot of borrowing, a lot of spending. And a strange thing's happening is where we used to have this question, do we save money or do we spend it? Now, saving money looks like spending money, because we don't leave the money in the bank anymore for 25 basis points return, right? You pull it out, you buy real estate, you buy Bitcoin, you buy gold, you buy shares, you invest it in a company. So now savings looks like spending, all right? So there's actually huge activity going on in the economy. And my friend, Will Bowie at the back of the room, he actually shared this insight with me. He said, you know, as South Australians and Australians, we just don't like to wait for anything. This is the Uber generation that, you know, we want it now, we want it yesterday, we want it, you know, the way we want it cheaper with, you know, something on the side. This is the Netflix generation, the Google generation, you know, the Uber Eats generation. We just want everything right now. We're unprepared to wait. So this idea that the economy was going to go to ground was probably not realistic. We're never going to go to ground. We want what we want. If we can't spend it here, we'll spend it over there. If you take that away, we'll spend it somewhere else. So I think that we were always going to push forward. And yeah, it doesn't really surprise me that the economy is looking strong. I would expect that with the responses that we've seen.
Good comments there, James. David, I can see
Nikki,
you're
when I have a
itching.
look, I did grab a couple of the results from
something
last year
prepared
just to have a
earlier.
look at trends. So if we talk through, so 2019 growth, 20% expected. Last year, which we were very surprised about, 50% growth. The remainder, it's stagnant. Not many thought it would go backwards. And here we are talking about a number that could be 100. So certainly optimism out there, and certainly people willing to spend. So if you've got a niche that you can target as a business, now is the time.
Absolutely. I'd like to talk about exports. You raised that earlier, and I think it's no surprise to everybody here. We know that some export markets, and particularly with those that have been imposed restrictions, have been hit pretty hard. So I'd like to just get a bit of a sense from people online and in the room about whether you export products or services interstate or overseas, if we can get that poll. And I'm going to come to you first, Jen. Clearly the wine industry is one that's been, you know, mentioned a great deal as being having a severe impact, particularly of the China. So we'll do the code again. So you need to go to menti.com and enter the code on your screens, 3077 7643, menti.com, 3077 7643. I can't get a sense from people online if they're having an issue with that. So for the sake of this, we call it, you know, bingo. It's menti.com and the code is 3077 7643. Great. So for anybody that is online, those results should be up there, and the address, the web address and the code is actually up there as well. So we've got a real mix of some, we don't have the actual, oh, there we go. So that's 17 people, I think, that have participated in that. So we might get those numbers up as some people have registered for that. So Jen, I'd like to come to you. Let's talk about the wine industry, exports, China, other markets, your thoughts.
It's been a very, very interesting 12 to 18 months. I think 2020, the year that was, began with the finalisation of Brexit in February, declaring a global pandemic in March. In November, we saw the results of an extraordinary US election and the outcome of that across business confidence in the US, which is a very key trading partner, certainly for South Australian McLaren, Vale and Australian wine exports as well. On top of that, we saw Chinese government start to increase the national security laws throughout Hong Kong, which is another core export market for Australian wine and certainly McLaren Vale wine. And then finally in November, the Chinese Ministry of Commerce introduced the twin tariffs on Australian wine for products in 2 litres or less. So effectively all bottled wine exports had a tariff of more than 200% placed on them. And that's other tariffs placed across barley, lobster and forestries and so forth as well. So when you look at 2020, not only were our exporters responding to COVID challenges of opening restrictions, cash flow implications as a result of that as well too, increasing costs associated with freight and time to market as well as a result of freight charges and increasing insurance costs and so forth. We then had some very compounding and very dynamic changes in many of our core export markets for Australian wine as well. So it's been very, very interesting that the impact, just with some core numbers, in June, 30th of June last year, Australian wine exports were $2.8 billion. And of that, 1.2 was exported to China. And of that $1.2 billion, $800 million worth of wine was from South Australia. So the impacts were significant for South Australia. And I think the thing to remember with China is it's not just a matter of volume and value that went to that market, it was profitability as well too. And the demand was phenomenal. So China was quite the unicorn for South Australian and Australian wine exports. In the last 12 months, at least to end of June this year, we have seen exports declined, and I think that was to be expected as a result of twin tariffs, certainly, and looking at the percentage of Australian wine exports that went to China 12 months ago. But what's interesting to note is that if you stripped out China from the last 12 months and declining exports, Australian wine exports have actually grown, and they've grown 6% in volume across all other markets and 12% in value. And it's retained its national price per litre. The average price per litre has been maintained. So whilst the market's incredibly dynamic because of COVID and because of other geopolitical alliances and changes across the last 12 months as well too, there's still been some pretty phenomenal opportunities for those businesses that have had the cash and the resources, whether that's humans and or partners, to be agile and to take advantage of those opportunities in new markets. I think the conversation for the coming 12 months is going to be much broader across the supply and demand equation for production and demand. So production of grapes, demand for wine globally, and what does that mean in terms of sustainable production and supply as well as profitability as well. So that will be the coming 12 months, and grape and wine production is incredibly capital intensive and inventory high as well too. So the next 12 to 18 months coming will be a big tell.
Thank you. And a reminder for everyone, buy South Australian wine. You know, never has there been a more important time to be doing that. So you don't need to have that celebration with a French champagne. There are incredible sparkling wines that are produced here. Julianne, Global Centre for Modern Ageing. I mean, you know, think of the ageing sector. I know you've got clients that are interstate and overseas. So what are you seeing in this area?
Well, we've increasingly seen that South Australian, by way of its aged care providers, are really seen as quite an innovative crew. And for markets in Asia particularly, they're grappling with exactly the same problems that we're facing here. Ageing is a universal experience, and yet solving the problem in particular environments is very much the requirement of localization. So the learnings and the IP, I think, that is being garnered in Australia of new systems and processes and management, the way in which we are enabling people to live differently rather than a model of pure care, to more of a model of support and enablement. And yes, there is absolutely export opportunities for our IP in terms of our knowledge. As a young organisation, probably 70% of our revenue sits outside of South Australia, and that includes a major engagement in Asia for a nation that's grappling with a gerontechnology platform solution. So a systemic response where the nation itself is investing $1 billion, and we're bringing some much smaller amount, I must add, international engagement of expertise to that problem, solving that problem. And that extends not just to strategic advice, the importance of co-design and how we will create products and services with older people at the centre of the frame, but not limited to. Because as we age, obviously we're not doing that in isolation. Our families, friends, carers, the workforce that might sit inside managed organisations such as aged care, or quite simply, the people you might phone up, the equivalent of Uber in the future, right? To your point, that you'll be dialing in to dial up or dial down on any one day the services you'll need to live in your home. And 85% of people prefer to live in their home. And if they have to move, they'd like it to be as much like home as possible. So the learnings that we're garnering here in Australia and South Australia directly around how to do this well and indeed better has the attention of other markets. Now, we're not the only country or state putting attention to this, but what we are seeing is a rapid increase of government's awareness of the need to invest and invest seriously, and not just the governments, but organisations and not-for-profits that need to come together. And we obviously have now more wealth of our ageing people and health and education than we've ever seen before. And our superannuation here has been a component of that. So what we need to understand in the other nations in which we wish to serve is how can we support understanding the funding models and frameworks that they operate within, both public and private, that exists. And these are huge opportunities, and technology, whether we are comfortable with it or not, is certainly part of the solutions of the future. And understanding how to unwrap and deliver people-centred, intuitive product and service delivery that improves and informs not just the way we live, but also the way we work. So our workforce will evolve and change in the future, and many of us will be working well into our 60s, 70s, 80s and beyond, and happily if we choose to. So these are all other components of the export opportunity that are either directly embedded in products or in the service components and the supply chain that represents it.
Thanks, Julianne. Issues finding and retaining staff has been a perennial issue within this survey. And of course, closed borders only exacerbates that with skilled and unskilled migrants. There's a gap on those. We don't have our international students that we've had. So our next question for everybody here is, do you have trouble finding and retaining suitable staff for your business? That was quick. we're going to ask a second part question to this one. So I'll just let those results just come on. Okay, so for those of you, the bulk of you that have answered yes, can you please respond to the next one? Otherwise you can have a little time to sit out. What's the main cause for this in your business? So you're going to have a number of choices in here. So for those that don't have that, we've got shortage of suitability, qualified candidates, difficulty attracting applications, difficulty finding persons with a cultural fit, intense competition for the same skills, poaching from competitors, the demands of the role or other. David, I'm going to throw this one to you. How does this sit with your clients and what you're hearing?
Certainly from our clients, that discussion around accessing good staff and what has now become more of a movement in staff than it had been 12 months ago are absolutely themes. Interesting to see the numbers up there. Again, if I look back previously at the last 3 years where we went 47% concerned, 44% concerned, 42% concerned last year. And, now we're talking about a number up in the 80s. So again, that change in mobility. The comments around losses to interstate are also interesting. You would have thought that it would be more stable in a COVID environment. In fact, better to encourage to get staff here, but that doesn't seem to be the case. And we even see that with transfers, despite when we talk to our colleagues and other contacts interstate about how tough it is in their environment in Sydney and what it had been in Melbourne. We're still seeing that movement in staff. And then the enormous changes around how you try and engage with staff in what's become a very technology-based environment. How do you balance work from home? How do you continue the culture you build up in your business around that team when it's spread and diversified and you're having to do it on the other end of a computer screen or an iPad or a mobile phone? So there are lots of interesting challenges in that regard. So it's not surprising to see that there are difficulties.
Jen, I'll pick on you because of regional, because we hear regions are really busy and tourism's booming and it's really fabulous, but I'm hearing some horror stories of businesses that just are open, have the demand, but haven't got the staff. Absolutely, yes. And I was listening to the unemployment numbers that came out today as well. And so whilst unemployment's declined, the participation rate in employment has increased, or the desire to be in the workforce has actually increased, where people are actually exiting the workforce as well, and increasing numbers in underemployment. So I find these numbers quite interesting, and therefore when you start to think about the casualisation of the workforce more broadly over the last few years as well, noting specifically COVID impacts upon the tourism and hospitality sector, there's generally been the first businesses to bear the brunt of that, just suddenly closing, suddenly opening, inconsistent ability to trade and so forth, and therefore inconsistency to attract and retain staff. I think there's a full picture to these numbers, and amongst the unemployment rates as well too, whether people want to continue to work in the workforce, whether the jobs that we have out there, including full-time equivalency, actually meet their needs and so forth as well. So it's a bigger picture conversation, but coming back to a regional perspective and wine tourism specifically, I think hospitality and tourism, because it's been hit so challengingly over the last 12 months, it's just not an attractive sector of the workforce anymore if you would like to actually have an income, a stable income. It is, absolutely. James, what are you seeing in your sector in skills?
Look, I suppose what I want to say to this is that if you've got staff, you need to woo them every day. There needs to be acknowledgement. There needs to be growth opportunities. There needs to be a cake on their birthday. There needs to be a phone call from the boss when they, are recovering from surgery. You need to woo them every day because, by God, your competitor is. So you need to put in the work. And, when you lose somebody because they're poached, you can sit there and pout about it, or you can actually really deeply interrogate how you lost them, because you might walk down the road and discover that your competitor has a health program, a daycare centre, that they have a wellness check-in every morning. And so you need to firstly be really humble, commercially and aggressively humble about your approach to business and how you self-audit, and actually say, well, are we the best? Are we the best employer or not? Because the day of somebody just blindly staying with you till they get their gold watch or retirement, they're long gone, all right? And one of my mentors, he's a billionaire now, he's made his money, he doesn't care anymore, but he'll give me breakfast on occasion. So I said to him, what's the one thing? What's the one bit of advice you want to give me? And he said, If you're going to run a service-based business, just accept up front that everyone's always leaving. They're moving at different times for different reasons, birth, death, divorce, you know, go against you, start their own thing, join a competitor, you know, clashed heads, whatever. If you get your knickers in a knot every time someone leaves your business, you're not going to do well. You need to have just an acceptance of that and build that into your business. And it's really hard for managers in Australia because you can chart this. Managers land on a spectrum from very passive all the way up to very aggressive. And normally in countries like Australia, we produce very passive managers because we don't have a lot of available skilled labor. If we lose somebody, it's very hard to replace them otherwise. At the aggressive end of the spectrum, you've got your Gordon Ramsay style, because they can throw you out of the kitchen and there's 20 other people waiting for the job, you know, the next day. And so for you to run a business today in Australia ethically and a value-driven business, you need to really be prepared to put your money where your mouth is, because the standards you walk past are the standards you validate. And if you've got someone that's a keeper of the keys and they start behaving badly or they start doing the wrong thing, you need to be prepared to challenge them on that behavior, knowing that you may be advertising for another year before you can replace them. So, you know, I suppose what I want to give is an acknowledgement and take my hat off to the people that are strong managers in Australia, because it's not easy. And anyone that wants to talk more about that over a drink after this, you let me know.
Thanks, James. And some really good suggestions and insights and thoughts. So depending on whether you're an owner or a manager, there are many different priorities for your organisation. We've got now around 6 months until the election. So if you could have you can probably tonight have your 5 minutes with the Leader of the Opposition, but if you could have your 5 minutes with the Premier, the next question is to ask, what would you ask him to prioritise? So for those that may not be able to see that and don't have that down there, we've got stamp duty, land tax, payroll tax, skills and training, including apprenticeships and trainees, workers' compensation, targeted investment in the local economy, or other. So pretty broad spectrum. We are currently, look, I'll give that a couple more seconds there. David, I think it'd be good for you to address this. And
yeah, certainly this is a question we've been asking for many years to put comments around. We're probably quite surprised last year. The leading element last year was targeted investments. Whereas if we go back, certainly in the early years, certainly most of the comments were around payroll tax, stamp duty, work cover at the time, as you would expect from business. So again, really strong for that targeted investment last year. So interesting to see the spread there again.
Yeah, isn't it? And at Business SA, we do similar surveys of what's important, particularly leading into an election. And we've just released our charter, but it is pretty broad. I mean, certainly wholesale tax reform would be good. It's a national issue. Well, it's a national and a state issue. But I think, you know, if you look at some of the areas around the incentives around apprenticeships and traineeships, there's some good incentives around that, but further around payroll tax incentives and deductions for people taking them on would be another big one. James, were you ready to go there?
Yeah, you know, the reason why I think all those people chose payroll tax is because they think it's unfair. You know, we're in a state where on occasion we've got the worst unemployment in the country, and yet we go to the people that are employing larger volumes of people and we give them an increasing tax rate the higher their wage bill becomes. And I've always not quite understood that, and I'm sure someone will explain the logic behind it to me at some point. But yeah, you'd think that if we have an agenda to reduce unemployment, then if we found a way to run our companies more efficiently or take a chance on employing more people, that there'd be a diminishing tax around that instead of increasing. And I know that I've got a perplexed look on my face. It's not theatre. It's just, you know, I don't quite understand that. And I'd also like to see some consideration around stamp duty, because I think there needs to be a stamp duty exemption that you can apply for. And I'll give you an example to that. I had a lady, and I still sell houses, and I had a lady the other day and she bought a house and it had about 3 steps in it. And about a day into the house, she fell and she was not going to be in a position to do those stairs anymore. She had sunk about $30,000 or $40,000 into stamp duty. I now am responsible for working with this lady to find her the home that she needs with the budget that she has available, which has now been diminished by $30,000 or $40,000. No value has been added to the economy. No value has been added to her life. And I think that I need to be able to fill out a form and say, hey, this is what happened. And I just need to rehouse this lady. Does that make sense? Yeah. So I think they're the two things that I'd want to talk about.
And if we see that popping up on Labor's policy at the next election, we've got enough witnesses here to take that. Julianne, you've got something to participate.
Thank you. And I think, look, to that point just there, it just opens up a new growth opportunity, doesn't it? So how do we repurpose the homes of people so that they can stay in them, access the equity of the assets that they have and allow them to repurpose their homes and create that ramp, not the 3 steps, and think about the money that gets injected, not just into that home, but into the trades. You know, building and construction is wonderful. You give it a pocket of money and it spends it on supplies and materials and labour, and the money keeps circulating in the economy. We know that people want to live in their homes, so we need to create new products, new services, and tradespeople skilled with understanding how to work with an older market. And it lends itself quite nicely to the point that was there a bit earlier around skills and training. You know, a person over the age of 55 has 5 times more trouble getting a job than anybody under. And yet every one of us in this room knows we've got an ageing population. So that means we've got an ageing workforce. We also know that I've given you the numbers about the consumption spend around the globe and here in South Australia of older people. And yet we don't have older people represented in our workforces the way we should and could. The numbers move. 65 is the old number. You know, in 1950, you retired, a male retired at 65, as it was reported by the stats at the time, and died at 67 in Australia. So you had 2 years of retirement. Go forward 70 years and people living 10, 20, 30 years. They want to be, if they choose to, be gainfully employed, skilled and trained. And as we do this, as we reinvent the opportunities for people's future, let's train them and skill them in growth markets. You know, we can have so many baristas, but let's think about what are the skills and the training that support submarines, that support new advancements in space, that support AI and technology. We know that our older population now is more digitally adept than previous generations. And what holds us back as a government and as an industry, for boards and management, this message is clear too. It's that ageism is not on the table. And this week, the Human Rights Report was issued and expressed how comfortable Australia is with this ism of ageism, as distinct from the other sexism and racism and other equally important components that at the board and management and at cultural levels we are addressing. We've yet to solve, but we are addressing. And we need to develop a level of conversation and consciousness that invites the conversation of how do we improve and skill our workforce and make 5th generational workforce cultures. And the evidence is there that when you combine an older worker with a younger worker, the productivity lifts. We know that when you combine an older entrepreneur with a younger entrepreneur, the success of that business as a startup is substantially stronger. And this is in the US and here in Australia. So I think part of the skills and training is harnessing the value of people over 55 and responsibility of employers around large and small to be skilling and preparing our employees for the future. It's true they won't stay with us necessarily in the company we're in, but as a business ecosystem, we have a responsibility to skill and train people for futures of productivity and participation.
I always love your passion, Julianne. It's fantastic. And there are, I mean, everybody talks about these incentives that are around for trainees and apprentices, and you think of them as either school-based, but the incentives for mature age apprentices are very, very good. And I really would encourage you to have a look at those if you haven't done that already. As business owners, we operate within a broader society for the sake of staying in tune with our clients or customers, attracting talent and being good corporate citizens. But it's important we're attuned to the priorities and views of the community. So this next question has 2 parts. First, we'd like to understand how important it is for your business to be socially and environmentally responsible. And if you can return that to the screen, we're going to start with that one and then we'll go to part 2. Oh, can we flip that to part 1? Thank you. Oh, sorry, there we go, great. Very important, somewhat important. We don't have the numbers on that one yet, but certainly seen as very important. So then we're going to skip to the second part. How many of you have a formalised responsibility, or sorry, a policy that's formalised that in your policies or by some form of accreditation? Again, I saw this environmental and social responsibility piece was very key on the sort of the 28 to 30-year-old people are nodding. I think they can sort of see that, and it seems to be something that employees are almost demanding now of their employer.
Certainly it is a staff engagement issue, and absolutely we see that as well. So even on identification of consumables around the office, comments made about things that we now no longer use. And it's part of your proposition in terms of the way that you do interact. I guess it becomes a little bit easier for BDO as an organisation, being a services organisation, but I even know for other clients in terms of choice of supply and product and what occurs with packaging and the items that they're interacting with, that discussion. It's good to see that this continues to be a growing issue. We've asked this question a couple of years. So 2 years ago, we're at 30-odd% for important. Last year in the 50s. Now it looks like we're in the 70s, 80s. So certainly growing around that. And I guess for a lot of people that probably don't have the skills or the knowledge to understand what's required to put a formal policy in place and to articulate that, and then what's required to implement that across the business. So I think there's still a lot of education and growth to go in that area as well.
I'm going to pick your brain further on that. So for the people who have said that they are interested in doing that, but they don't have the policies and procedures, where do you recommend they should be going for that?
Well, we can certainly point them in the right direction. So absolutely, we can have a chat about that. So thank you.
Great. Okay. No, sorry, James, did you want to comment on that as well?
Yeah. I found that interesting. It's sort of a bit of a kumbaya question. Who thinks we should look after the earth? What I'm wanting to interrogate is the 23% that said, oh, not that important. But I say it jokingly, but therein is the riddle, because the problem well stated is the problem half solved. Why did a quarter of people just act completely disenfranchised with that idea? I think that what I take from that is that there's a quarter of people that just actually haven't had a model presented to them that represents having societal responsibility or environmental responsibility that they had all engaged with. So, I would want to deep dive into that quarter. If you ask them some questions, you'd hear some interesting answers, I think.
Absolutely. Jen, I think sustainable wine growing, I'm sure
Huge.
You've got some contribution.
Yeah, huge. And I think looking at that 23%, 25%, and to your question, Nikki, I think, is it understood? What are my ESG goals, and or what is sustainability is still largely misunderstood and or miscommunicated as well too. But broadly speaking, I think sustainability in business is not optional anymore. It should be fundamental. Looking on the consumer side of the spectrum, consumers are increasingly demanding to know, certainly on the ag side, in primary industries, how are you actually managing environmental and natural resources, water and so forth as well? How are you actually producing glass? How are you shipping? How are you putting corks in wine bottles and so forth? And even for tourism products, what is my absolute footprint in terms of air miles on the ground and so forth as well? So I think there's an increase in consciousness, and that is translating to an increase in action for sustainability metrics in and around the business. I think, that mentality of good for me and good for we, or good for we, and then that's good for me as well too. We need to be looking at, and increasingly a number of companies are, profit with purpose as well too, is something that's really starting to be on the agendas. If people have discretionary income to spend on, whilst we would suggest it's necessary, it might be more of a luxury item for some, wine, how is that being produced and so forth? More locally within McLaren Vale, we initiated a grassroots program called Sustainable Australia Wine Growing, which is now jettisoned into the single national sustainability program for all grape growers and wineries in Australia. So you will start to see independent trust mark certification and auditing on the back of every single wine that's produced from Australia. And sustainability provides two things. One, market access, particularly noting that increase in consumer demand for green credentials and definitely sustainability credentials. But secondly, after that, sustainability year on year at least provides a benchmark of your on-farm and business performance. So you can start to measure the performance of water management, human resources, economic management, and so forth as well. Then start to think about, well, what are the resources that I need to apply within my business via skills, people, and or finances? And in another 12 months' time, you can take a measurement, a benchmark of your performance 12 months on and think, well, did that actually yield that return that they were looking at, that we were hoping for, or the targets we were hoping to achieve? So I think in two things, sustainability meets consumer expectation, but it also provides a pathway for continuous improvement for profitable and sustainable businesses in the long term.
That's such a great point. I mean, people sort of think about being environmentally sustainable and it's just something you're doing for the good of your company, for the good of your consumers. But businesses have to be, it's got to be financially viable as well. Julianne, workplace diversity and inclusion sort of forms broadly into this particular topic. I'm interested in how you see that best continuing to flourish in the future.
I think I alluded to a little bit about this with my last conversation with you, but certainly understanding and embracing a fifth generational workforce. And I say it not just because of a workforce skills shortage that we have, and it's dire, but also it's just smart. If all of the consumers are older too, many of the consumers are older too, who in your workplace has a natural relationship with your end customer? Otherwise, you're hiring third parties to inform you about a customer that you don't know anything about, because you used to employ them, but 5 years ago you let them go. They were perfectly fine, but they packed a little brown box and walked out to their car. So I'd like to talk about, ageism being, really part of the diversity mix now and being brought into the conversation, because it makes good business sense. And you'll have seen recently the ANZ announcing that they had, a strategy around hiring people over 55. And simply that was because they realised that their workforce wasn't reflecting their customer base. And I think we'll see more and more of that. I've seen it in Prudential in Singapore, lifting the cap entirely off the age of their people due to retire. They had talked about moving it from 60 to 63, I believe. And I thought, why prolong the problem 3 more years? The reality is, if you're a high performing contributor to our culture, to our revenue and to our innovation, then we don't care what your age is. Your skill set and your contribution. And so I think that way of looking differently opens up a global workforce that could come to South Australia and find themselves nestled here very comfortably, because we're taking the blinders off and not letting a number of somebody's birthday limit the opportunity you have to grow your business.
Absolutely. Well, as we are finishing up shortly, I'd just like to hear from each of you on the opportunities you see for South Australian business. I'm going to kick off with you, David, on the end there. What do you think are going to be the important areas that we can continue to flourish in the future?
I still think of our strength around providing services globally. So professional services, training services, software development, those sorts of things where we can use technology, sit in our wonderful environs here and provide good knowledge and value around the world, and enjoy everything that we have every day.
Great. James?
I think that Australia's in an interesting position, a very positive one. The framework's there because a lot of our exports actually require people to come to us. We export education, we export tourism, but that's people getting on a plane and coming to us and spending time here and spending their money here. So I kind of feel optimistic. I think time's going to cure this for us. I think, a lot of the tools that we need are already in place. And I think that every time that there's been a great war, it's followed by an illustrious time of celebration. And I'm kind of waiting to see whether that's the way Australians respond when they get let out of the house after COVID. I think there's going to be some big nights out and some money being spent. And yeah, I think if we just let time cure this for us now, we'll be okay.
Thanks, James. Jen?
Time will tell, definitely. overall, hugely optimistic. I think the brains trust and the skills that do exist within this state and the offer that we have is extraordinary. Looking ahead, and something we haven't actually touched on, something for businesses to consider is more that personalisation and customisation in services and or products as well too, I think is the key to unlocking that next level of profitability and consumer engagement as well too, which has that life cycle effect.
Good point. Julianne, finishing off with you.
Thank you. Well, supportive of the work that the state's been doing for decades, really, and not just the current period, but around securing a greater position in defence and space. But it wouldn't surprise you, I'm going to put age tech on the map. And I'm going to say it for a couple of reasons, not just because of the global appetite, but because you really don't need the run-up of 10 years or 15 years of infrastructure in order to enter this new age market that hasn't existed before, where technology is at the core of human-centred design. And what we have here in South Australia is an amazing test bed by any standard. I'm sure the reason why our business is having some of the success it is, it's because of where we're located here in Adelaide, South Australia. And I don't take that for granted. So I think keeping our minds open and our eyes looking upwards to seeing what should we be the test bed of that has global market appeal, that represents our citizens and our businesses equally well here, that makes sense to us as a community, but has profit involved in it in measures of both social value and economic wealth.
Fantastic. I'm going to hand back to Julie now, but Rudy. Hand back to Rudy now, but I'd certainly like to thank David, James, Jen and Julianne very much. I'm sure you would too.
So thank you, Nikki, to yourself, to our panel members, to Jennifer, to Julianne, and David and James, of course. We very much appreciate your time and expertise, and I think it's been really fascinating to hear all that input this evening. But this, of course, is not the end of the conversation. It's just the beginning. There are many great minds in our business community, and the ideas you all have and the opportunities you see should be heard. Please take 15 minutes over the next day or two to complete the State Business Survey and encourage your networks to do the same. The results are presented to both the government and the opposition, published in the media, and with an election coming up soon enough, will contribute much to the discussion. This year we'll be producing a hard copy version of the survey results as well as a digital one. We didn't quite get to the hard copy one last year. So that concludes the broadcast portion of the event for those people who have joined us online. So thank you to our audience out there, both in person here today and online as well, for joining us.